All right, couple of minutes early. So good morning, good afternoon, good evening, everyone. Today should be fun. NFP. We have the NFP tomorrow. We have ADP today. We have the Fed this afternoon. We have a whole bunch of stuff lined up. Yesterday's swing trades right here ended up closing this morning with a couple of pips in profit. In the midst of the night last night in the Asia session, I opened more. So I had an average of 2 stacks, which was somewhere in the middle here. And so this morning, just prior to the ADP, I closed everything. That made us a little bit of money. Where did it go? Yeah, so that made us a little bit of money. The news came out, and then realizing which way the news was, going to give us volatility, I reset swings, and these ones ended up paying 4 boxes. And so here we are now near the top of the daily candle. And if we look at the range, we've exceeded the daily range, right? But on a day like today, it would be kind of expected. If we look at the structure of this, we have lower low and clearly a higher high, clearly a green candle. And on a day like today, it looks like we might be even trying to go higher. All right, so let's look at this internally using an hourly scale. Right, and you can see for the last few hours, the low was created in the European session / Asia session, and we've been pushing up ever since, right? Sorry, I have hiccups. We have right here just created an ever so slightly higher high. That's enough to give us a hint, that we might be trying to go even higher. Right. So this is something we want to survive and try to buy into. Right. So if I remove this, and now we highlight the ceiling, which we just did, we can highlight the floor, which I suspect we will revisit after the Fed meeting. Right. So I'm thinking we're pushing higher into the Fed meeting. And then eventually, once Mr. Powell is finished speaking, I think we'll be back down. Right. So let's look at this here internally on the 5-minute chart. And then we can start highlighting where we want to be participating, right? Where do we want to take action, right? So there's a level right there I'd love to revisit and take some trades at, right? If I look inside of this, I see one right there also, right? So there's all these simple, with your mind's eye kind of stuff, right? No special tools required. And now we've created a plan of action that if the price visits these lines, we know we want to take part in buying that support. Right. So ultimately, we're trying to be going higher for now, right, into the Fed announcement somewhere up here, somewhere around here. Right. We should find that resistance we're looking for. Okay, so that would be a few rungs above us, maybe 3 or 4 rungs above us. 3 maybe. No, push this one up. Okay, so this is the same as we do every day. We create this ladder, we create this vision plan, this action plan. And if the price gets there, we ask ourselves a question. Do we suspect it's going to go through? Do we suspect it's going to be coming back? Right. The result of the news clearly brought with it weakness for the US dollar, right? That's kind of what this is coming from, right? All as a result of the ADP right here, right? That's the beginning of this. And we know this is not going to go to the moon, right? So I've been buying because of the news, the result of the news. As we speak, I'm looking for an excuse to start selling, right? And then as such, I'm willing to be a seller for multiple boxes to come, right? I'm just looking to start selling, right? Ultimately, I suspect, let's go back to this, let's go back to the daily. Ultimately, I suspect the high will be found somewhere that 61% retracement right here, right? 920, right? So between 08995 and 0923, we want to be sellers, right? But first we have to get into that zone. And so to get into that zone, buying might be a way to get there, or just sitting on your hands and doing nothing, right? Wait to see if we even get there and then start to sell it, right? I want to start selling it now because I suspect we're going to be pushing into that 920 area right around here. Actually, I'll just move this. There you go, right there, right? So I'm willing to sell these 4 boxes. I just don't know how they're going to line up, right? And I think by the time uh, the Fed speaker comes onto the podium, we'll be ready to come down off of that red line up there. Okay, so you can play it 2 ways. You can buy your way up and hope you don't get stuck holding the bag if we don't get there, or you can sell your way up there because we suspect the Fed speaker will be pushing back on all that dovishness. So, right, we'll see what happens. Right, this right here, let's buy this just for the time being, right? Because I do have this target higher up, right? And if we push up, I close a 3 pip trade. I can recycle it eventually somewhere around this zone here, somewhere around this area here. I do want to start selling, right? Anything this 09 there, I want to sell this. This is where I'm a seller. So let's buy this. And typical time of day, right? We show up on schedule. It's a bullish market, and we would expect a bullish pullback, right? A pullback in a bullish market. That pullback should take us into about 8:30 on this clock here, right? Right around here. And so that could be 1, 2, 3, 4 boxes right around 8:30. And then from here, I suspect we will resume this, something like that, right? So I'm buying this so that I can be selling later up here. Let's draw another line there, right? I want to be doing something like that. It's a matter of time. We have to see if this will even unfold, right? But that's the gist of what I'm trying to do. I'm buying this so that I make my money here. And then here I'm selling so that I can make my money here, right? We are planning one move ahead. Okay, so the news has already come out. Uh, Anything that's left on the calendar pertains to oil. And then our main event will be later on. It's I think 2 p.m. in New York. Right. So we have a plan of action. It's a matter of executing. Right. And here's support right there. Right. Buying that level made us money already. Trade number 1 for the day is already closed. Right. So let's see if we can continue to do this. Right? We want to be buying until we get closer to the main event, the Fed speaker. And then as we approach that main event, we're flat, and I'll be approaching it with a bearish bias. Right? So this is what I want to buy into. right? I don't want to chase this down. I want to profit from this with the next move, right? So I'm postponing gratification. I'm doing it on purpose, right? I'm exploiting drawdown. I have three. Let's put a fourth one there. And then I'll take this box and put it here, just so I can measure this next move if we get one. I'll remove that because I already know what my plan is. Right, so if we go back to our 5-minute chart, that ladder that we built earlier will start to come into play now, right? We'll be revisiting some of these levels on the way up, on the way down, and every time we get to ask ourselves if we want to take part in that trade or not. All right, so we've closed a whole bunch of trades already. All right, a red candle, I'm reopening one and two. I'm saving one just in case. All right, ideally, you want to be shorting the outcome of the Fed speaker. The premise is the speech is more important than the number. And you have to wait for the speech to go through because every word he speaks will be, analyzed and, traded on. So wait for all that stuff to subside and then we show up. Right? Red candle, if you can afford it, take a trade. I can't wait for this afternoon. I love days like today. There we go. This is what my measuring tool looks like, and I'm just waiting to see if I can measure the next leg down. Right? Maybe I don't need to. Maybe we just stay and go up into this upper box there. Ultimately, I know where I want to start selling. Right? Anything near that 900 area becomes a sell, 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 sell. Basically, we're looking up here. Right? Anything between that 50 and that 61. Anything between that 50 and that 61. Where is it? Right there. So three of our boxes. All right. More winners in the bank. Let's do that again and again and again. Do that a few million times at 3 pips a pop. Let's see if we can get a red candle in this current box so I can get in on the red, or I have to wait for that break and then see if I can get the retest of the break. And there's a nice pullback, nice little retracement right there. I'm buying that. In the current box, that affords me 4 clicks. In the current box, I put the 4th. And so now I have clicks for this. Well, actually, I'll be recycling the same ones if we go up there. This goes here. And so the ADP brought with it dollar weakness. Dollar weakness is not supposed to last forever. We would suspect it will come to an end when Powell gets up to the podium, right? So until then, we do what we can to profit on the bullish side. And then once we suspect we're near the top, which would come about, somewhere around bankers close, like we would normally find it. We want to start building for a short or play your way out, stay flat and then come in after Powell shows up. I've been repeating this on my two other platforms. And then when we look at the dollar index over here, what we're doing is preparing for the return up on this, right? This is testing for support. Once it finds the support that it's seeking, there should be a nice return here. Okay, so this is kind of the bigger picture. And in the time being, we have to profit from that bigger picture, with the facts that we have in front of us, right? So if we go into this box here, that will open me up to extra money to spend. If we go up into the upper box, it will have cleared out the trades that are already open, making me money along the way. Right, so I have a plan A on top. I have ultimately plan B, C, and D, and E below where we are currently. All right. Take a couple more right around here. That's the last that I can put in this box. So now I have to wait. Oops, I didn't want to do that. Get rid of it. Now I have to wait and see what happens next. How do we come out of this current box? I guess we're coming out from the top. That would be an assumption. Right? The bigger scheme of things is selling will be key today. We just have to figure out where to start. Right? We know the best place will be somewhere between 50 and 61. And where I put the fib, if anybody is asking, is across the current range. Right? So this is the current range that we're trading within. And so I go across the range and I'm looking for something like this. Right? And ultimately, I move back down. Okay, so this is what we're playing for right now. We're building a position or will be building a position for this once Powell gets up to the microphone. Right? Until then, we have to trade the facts. And the facts are showing or pointing upwards for now. We just don't know how far up. And so on our 5-minute chart, every time we go up or wrong, we have to ask, is this it? Is this enough? Do you want to keep going? Do you suspect there's more? Keep asking yourself these questions and keep answering them, with the facts that you have. And then ultimately you'll find out some of these moves don't last forever. And 99% of them are moving standard deviations upon standard deviations. And so it's up to us to figure out, how do we want to play? Like, do we want to continue the current move or build for the future move? In my mind, it's always worked out best to play for the future move, right? So this right here, trying to finish going up, that may turn against us, right? We don't know if this is the high. We suspect it's not, right? That's the probability that I'm playing. I know I want to sell. I'd be more comfortable selling at the high instead of buying at the high. Right? I just think that there's more to come. Oops, changed it. I just think that there's more to come and we can take advantage of it. And then the selling will eventually come. But I don't think it's here now, right? Because of what we have on the calendar. right? So I'm just recycling the trade that closed here a second ago, a minute ago. I just put it back on in that same box. Today's January the 31st, last day of the month. I think we've had an awesome, awesome first month. 2024 is on its way. All right, so let's see how if we come out here, if we come down into this, that will open us up to spending more money. And that's something we've agreed upon beforehand, right? It's part of the plan. It's not like we're scared to do it or forced to do it. It's part of the strategy. Oh, there we go. See red and repeat. All right. If we see red around here, we want to repeat that trade. Boy, oh boy, oh boy. There we go. Nice little wick. I'm buying it. I brought it up to 4 clicks for the box. And now I can get ready for this or for this. Make sure the box is the right size. Yep. Just copy this one, put it up there. All right, so buying support right here, right now, would have been a good place to buy. Let me remove this. Where we were just a second ago. If we get up to 09, anything from 09 and above, you want to sell into resistances. Right? So between now and the next 3.5 hours, we may or may not get to 09. And so that's the idea, right? We have to be cautious here because we don't want to be holding longs thinking that we're going to be selling from higher if it doesn't plan on doing this. We'll see. We'll see in real time, right? Through the lens of that box, it's like your windscreen or your windshield on your car. You're trading what you see there. You're trading the facts. The 5-minute chart is your navigator. They're looking at the map. They're telling you what's coming up next. And those are the rungs on the ladder. If you can take a trade, take one here. So we'll check things out real quick. What are we at now? We're up $1,557 on the account. Yesterday, oops, sorry. Yesterday we did $163. One loss. Altogether in the account, we've made it almost to 10,000 pips. Almost. We're nearly there. 193 losses, almost 2,500 wins. Things are working well. Closing more trades in this neighborhood right here would allow us to recycle them before the next leg up, or at least on the way, as the next leg up is underway. We're just trying to find where that's coming in, what time, and right on schedule, right? We should be right in that neighborhood at this time, right? Right around here, 8:30 or so. We'll see in a few minutes if we need to be, getting rid of all of this in box number 2, or if we get to add all of this. We've exceeded the average daily range by quite a large margin, actually. And so the idea now is to, make sure that we don't get stuck holding the bag. Right? The average is about 62, 63. Today we've done 81. And here we are breaking into the lower box, which opens us up to clicks. 1, 2, 3. And I'm saving 1 for the bottom of the box if we get there. Right, so all I'm doing is spreading my risk. I'm trying to do it as evenly as possible. You can see it's like half a centimeter or quarter inch every click or so. And in doing so, I'm not piling up risk at any one end, right? It's kind of even, and I can control that white line there. Okay, so if we break into this lower box, that will open me up to another 4 more clicks. And finally, right here, and that's the last 4 that I can afford to take. Right, and if we break below this, it will take out the first trade that I opened. It will take out trade number 1, which is my most expensive loser. Right, but it's a big if, right? It has to get down there for me to lose. Right, we're buying support right in this area here, this zone there. That's what we bought into. And if at the right time of day, the bars themselves, 3.7 pips, I'm only asking for 3. And so if this is support, 1 bar should be more than enough to cover what I'm asking for. Right? That's kind of how the system works. Right? We don't ask for unrealistic goals. We just ask for something that the market can give over and over and over. So now we're waiting to see time of day, bottom of the hour. That should suffice for the retracement and for the bull pullback. Bullish trend, pullback. We built a position in this environment, and now we should be getting paid for this postponing of gratification. It's a matter of, laying the trap and then watch the market fall into it. So now let's see this box here, dynamic. I'm just trying to see if I need to put it here and catch the move up. or if I need to put it down here and measure the move down. Either way, I'm game. I'm willing to play. Mhm. I don't want to overspend my clicks. I'm already into 2 boxes worth of risk, so I have 8 clicks. I have to see some of them close so that I can reopen them. It's this balancing act. By the end of the Mr. Powell event, we'd be looking at being bears on the euro. That would be the optimum case, right? So let's see. It's usually about, the way this system works, it's about 70%. Right? We have this teeter-totter or this seesaw in front of us, and we're right about 70% of the time. It's a matter of, learning how to lose in that 30% that we're wrong. Right, so here's a red candle. I'll take a trade right there. I'm just recycling the one that closed 2 minutes ago. I'm getting ready to buy more if I must. Crude oil inventory, all that good stuff. Another 28 minutes or so. I'll have to let you guys go. Let, let's see if we get to spend money here. And by looking left, we should find a place to spend that money. There's a nice level here. I see something right around here. I see something right around here. Right, so I'm planning ahead where my clicks will go if we go here. Right, and then ahead again in this next zone. Like I said earlier at the beginning, we're just spreading the risk, right? We don't want lumps. We don't want big piles of risk at some places. Yeah. That sets you up for a martingale situation, right? It sets you up for a really big flop. What we're trying to do here is spread it evenly. And then what this will represent in the end is anti-martingale, right? It's the opposite of martingaling. Basically, what we're doing is adding to our winners. They're not winners now, but ultimately they will be. Right? So we've exploited the pullback, okay, a measured environment. If we actually did the measuring from the top right here and reset the boxes to measure this current down leg, the current down leg is 2.5 boxes. 2.5 boxes. right? And unless we can get to the bottom of the box, it's more likely that we're going up, right? So I'll move these aside because they were used on the way up. And now we're just concerned with this leg down, right? This leg down is allowing us to build a position. And then with this current leg down, hopefully finished near here, we should be able to get paid on this with the next leg, right? The next move, the outcome of this, right? The outcome of this right there should be a move in our favor. Should is a big word, right? And that's kind of that's the problem that we have, right? When we put all our hopes and dreams in that one, oh, it should do this, then we get upset when it doesn't happen. It's less upsetting if you use the word could, and then you create all these alternatives, like it could come here, it could come here, it could come here, and whatever it decides to do, I have a plan to either take part of that or take part of what I've already been doing off of that. Right? I can close trades too. It's not all about, opening and opening and opening. No, sometimes closing a loser is the best thing to do before it gets worse. Right? So see the standard deviations, right? 3 of them. We've tagged the outside of the box here. Right? So that fulfills 3 standard deviations. Is the market willing, able, and capable of doing a 4th? Right? The average should be 3. Once in a while, we use a 4th box that brings us to 36 pips. And that's a 4-box move, right? Just like we had on the way up. We suspect we may be experiencing one now on the way down. Right? So let's just see. When we check the calendar, let's bring up the calendar. All right, this is what we are trading right now. All right, we're taking advantage of this. And then this is what we hope to be shorting or shorts as a result of. Right. And then we have tomorrow non-farm. Okay, so it's the crescendo is tomorrow. Today is only the beginning. If you can afford to take a trade, now would be a good place to do it. I'll take one. Now I wait. See if we can get paid on those. Right, look how nice that is, right? If we go to our core patterns and axioms, this defines that slowing momentum down that we tend to target, right? It shows it to us right there in front of our face, right? Large, medium, small, and then this is testing support. And with that test, the assumption is a bounce should result, right? So this slowing momentum is a clue that's right there in the open. And if we take it for what it's worth, there's a probability attached to this clue. And over time, that probability plays in our favor. And so it's when we start changing the way we trade these probabilities, that's when we pay the consequence. Right. So I'm testing support right here. If I can get into this bottom box, anywhere near this purple line right here, I'll be more than happy to take a trade or two. as we speak, we're right on the edge, right? We're right on the threshold. And that happens to be that line we highlighted before. Oops, not this one. This one here. So we want to remain long for now as a result of the ADP, as a result of the forthcoming Fed announcement and all that stuff. If Mr. Powell doesn't push back, the euro could keep on going up. Unlikely, low probability, but still, still is a probability. And so there's a criteria, right? You and I have to know where we're wrong. That definitely would be a place where we are wrong, right? If we start making higher highs and we are shorting. So be careful, right? We'll know when we get there. For the time being, it's building that position. It's laying out the risk, spreading that risk, and you're trying to spread it as evenly as possible, right? And then we take advantage of standard moves, right? The word standard is what's at play here. And then because it is standard, it comes with an expectancy, right? It comes with an outcome out of the box. And we play off of that, right? I'm willing now to take those trades. Now, if I can get into this lower area here, right? I'm willing to take the clicks that belong in this box and continue to build my position, right? Continue to postpone my gratification. All right, we've gone 1, 2, 3. We've done 3 rungs. We've dropped down the ladder 3 rungs. It's normal to do 3 or 4. It's normal to be testing support. It's normal to be expecting it to bounce off of support. Right? These are all normal events. They're just not presented to you the same from day to day. The box allows you to see that. So if you're buying for 3 pips, 3 pips, 3 pips, like I'm doing here, our trades should close before the Powell main event, right? That's the intent. That's what we're building all of this for, right? To see the resumption of all of that, right? So the UK fix is what we're kind of hoping will add to the volatility, or at least provide the volatility that we are seeking, right? So I'm approaching that level where I want to be buying. It was right there just a second ago. Yeah, I'll take one there. I'll take 2 actually. I'll take a third. And I'll save 1 just in case we get to below this. Oh, like so, right there. Okay, so now my break even is, let's measure. Break even is 11 pips away. Right, so within arm's length, within 1 and a bit boxes, I don't have far to go for the price to turn favorably. Right, so I'm exploiting this environment. I'm exploiting this pullback because I understand I'm testing for the next outcome. Right, this is what we are building for. Ultimately, we think it might actually even go up to here. Okay, so I'm buying on the way down. It's not, clicking at random. It's spreading the risk as evenly as I possibly can based on the opportunities that are presented to me. And as you can see, some of them closed on the way down, right? So we're making money even though we're accumulating drawdown, and it's not an accumulation that is, uncontrolled, right? We're not just spending money willy-nilly. It's allocated for this job and it's allocated, in percentages. And so we can, scale it up, scale it down. We can grow the account without having to change our behavior. There we go. All right. There we go. I have one click left to spend. I'm hoping to spend it down here if I can. Okay. Top of the hour is coming up in about 15 minutes. And with that will come with the fix, the daily fix. And so we have to anticipate volatility. We have to anticipate, it's the last day of the month. So anything can happen. That might be the cause of this. Bigger than normal move. There's that chance to put on that last click that we have if it gets back there. The current retracement is how many pips? 32. We're thinking 36 is average. How long has this been? 42 minutes. All right, so let's dig our heels in. We don't want to get rattled out of a good trade, right? Sometimes you have the position right in the wrong trade, or sometimes you have the wrong trade in the right positioning. And so, yeah, we don't want to get caught like that. That's the idea with building and layering in and using a strategy that will eventually pay us, right? Eventually. A lot of people, as we speak, are looking at all these red candles, and in their mind, they're racing to sell this because it can only go further, right? It's a downtrend. You and we look left, we see the inability to go further because we may be at support, and we test that assumption. And we test that assumption as cheap as possible with mini lots and micro lots. And when we're right, we make $1 or $2, or, we make enough to be satisfied. And that sets the stage for repetition. Right? Everybody else that's trying to chase, they're suffering from fear of missing out. We've gone beyond that stage, and we're actually thinking about the next move instead of trying to play the current move, right? The current move being this, right? We're exploiting this for that. No, it's a matter of looking to see if it actually even, gives us that, right? That's the thing. We know where we're wrong. And until we have been proven wrong, it's up to us to target break even. Right? If I can get to break even and keep working at engineering this break even, I'm keeping it within reach. I'm keeping it within reason so that even a move slightly in my favor can lessen the pain. Let's see if it pushes up from here. We have about 10 minutes or so. All right, this should, well, theoretically speaking, have been the pullback that we exploit on a daily basis. Now we just want to get paid for this work. And if it is moving favorably and it is closing some of our existing trades, we earn the right to recycle them, right? We just sit there and rest on our laurels. We keep on trading, keep on trucking. There you go. Recycle that puppy right there. Boom. All right. Nice and easy. Go. I'm reopening that. I reopened it on the wick as the, there you go. So if there's a wick, that will show up. Now I have two to reopen. One, two. I'll get rid of this because it's annoying me. There you go. And that's the kind of stuff we want to see. Boom, boom, boom. That's two freebies. Open a couple freebies right there. And then we are now recycling. I feel like a soprano in the waste disposal business. There. One. Right. So now things are becoming fun again, right? It's like volatility just showed up out of nowhere. Bars suddenly got bigger. That's what we want to see. If you can afford to take a trade, we are at support. If it drops into the bottom box, I will reopen the trades that were there originally. If you can find a way to leave the casino, that'd be awesome. There's our opportunity. 2, 3. And 4. I put the 4 clicks that I had for that box. And so now I'll be ready, willing, and able to put more here if I must. I may also take a loss, maybe a couple. We'll see. If we get there, we get there. Tragic life of a trader. We've just closed four more. I don't want to. They belong in that bottom box. So I don't want to spend it, but I don't want to spend them at the top. I'm already top heavy. Right, so we've created another outside range, even here on the 5 minute, right? We've created a higher high, we've created a lower low. That's enough ambiguity to screw a lot of the weak leaves on the tree. And so ideally our long tail stop keeps us out of this kind of trouble. Right? This fourth box and the stop losses outside of the fourth box, that's ideally what we want to structure. All right. Looks like I'll keep trading with you guys for a bit. I want to see these trades close before we end the recording. All right, so back in this bottom box, 1, 2, and I'll save 2 in case we go slightly lower. Okay, so the fix is in, or the fix should be coming in about 2 minutes, 5 minutes. This will be the last fix of 2024 January. So we're closing trades. I don't want to recycle them because they were from the bottom box. I have to wait to close some of the upper ones. All right, so we're just waiting a bit, looking for opportunities like this right there. If you have the money to take that red candle, take it. I'm just sitting back, watching for the opportunities to show up. All right, box number 3, 4 clicks. 1, 2, 3, 4. I'm allowed one more if I must. I'm saving it for this right here. And so now we're in the recycling business, and we have been for the last, what, 15 minutes, 16 minutes. Let's see if we can keep it going. By using the word could, we open the door to a lot of possibilities. Whereas, when you use the word should, it puts you into a container. It puts you into a box. It limits your possibilities. And then when those possibilities are limited and yet not delivered, we get upset. And so over time, we have to move away from setting our expectations using the word should. We have to use the word could instead. And that eliminates a lot of the errors we find ourselves building into. Right. So here I am taking this box and I'll move it to the top right there so I can measure what's happened if we get there. This one aside. Right, so we have recycled the trades once again. Let's see if we can close some of these ones here, the ones we have currently open, without having to open more. Right, if we just keep going like this, we're building cash flow, right? We're accumulating small, repeatable trades over and over and over and over. It's almost like collecting coins. And at the same time, we end up leaving the casino with our pockets full of coins, right? So it's understanding that you're running a business and the business is controlled by time. Anything that goes against those start and stop time, we would consider over trading, right? It's outside of your business. Right? So I'm waiting to see if I can close one or two up here so I can recycle one or two without jumping the gun, right? We don't want to count our chickens before they're hatched. Sorry, I have hiccups. Yeah. My medications have changed. That's upsetting my stomach. Right, so if we can take a trade there, go ahead. I'm already maxed out. I've already got all my clicks in, but I'm now in the waiting mode. The only thing that will get me out of waiting mode is to close some winners or put me back into box 3 so that I can reopen more trades. It looks like I'll be closing winners first. Ultimately, we sell from expensive. All right, so we've just closed a couple. Let's see if I can reopen a couple. I'm buying, if I can see red there right now, if I can see red, I'll buy. Come on, come on. I think we are on to something. Right, so the recycling's happening right here, right now. Boom, boom. I have 2 left. One, 2. Okay, so if we can keep doing this, recycling the same 3 pips, 3 pips, 3 pips, 3 pips, you do this for an hour and a half, maybe 2 hours. By then, you've accumulated enough winning trades that you can consider walking away. And with any kind of luck, the drawdown is manageable and probably, you could be risk free without too much trouble, without spending days in front of the computer. Right here, I want to buy. Right? Why am I buying it? Because it's at support. The edges of the box right here. Right? Everything is all lined up nicely here. And if it drops into the bottom box, I buy more, right? I'm allowed to, and I have the money to do it with. Let's go, let's go. All right, so we've been at this now for an hour and 5 minutes. An hour. I think we've been doing pretty good. You know, we've built this position right here. Let me highlight it right there. And we're now starting to get paid for the work that we did in that first hour. And so with time, we'll get paid for everything that we did, and we'll be setting up for the next move, right? The next move being a push back down after Powell, right? After Powell. And so it's the going into the Powell. This is what we're trying to do, right? We're trying to find support, test our assumptions. If we have our assumptions tested and repeated multiple times, we're making cash flow. Right. I just put the trades that belonged in that bottom box right here at the bottom of that wick right there. Boom, 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 boom. Right. So it's this recycling that makes us the money, and then it's the time of day that allows you to keep it. And with the right psychology, you know, you get discipline and all that good stuff that comes with the strategy built in, right? It's built into this. You just have to follow along. Right? We're back in that bottom box. If you have a click to spend, spend it. In doing so, you're changing your break even, right? You're adjusting where your exit will be. Time is on our side. It's just sometimes we're not ready for what the market has in store. We want it all now. We want it all yesterday. The market is willing to give it to you 3 pips at a time over years. Right? Here's me in that lower box again, spending the money that belongs there. Right? This is not over. Let's see. If we can get to like 895, just around the 900 mark, that would be an awesome, awesome place to start selling. Right? This right around here, 895. Right? Anything above this right there, anything above this, we want to sell. It's the problem is, will we get there? Which I think we will, but how long will it take? You know, what's the timeline? We have 3 hours before the Fed announcement, right? So 3 hours should be plenty of time to get us to this upper end of the range. Looks like we might be doing it as we speak. See if I can close these trades right away. Then I'll be setting the stage probably with pending orders up at the top there, and I'll be able to go about my day doing what I got to do. There's a million ways to approach this. Pending trades is not something I do often, but when I have my plan already figured out, uh, I don't mind, testing those outer ranges with pending trades. If the price gets there, I'm in the trade. Uh, it's like a freebie almost, right? When the plan just works. Let's see it bounce from here. That's what we're into. Bouncing. We brought this little kitten home a couple weeks ago. My hands are covered in scratches. Man, oh man. I hurt. I need hand lotion. Come on. If you guys are recycling your trades, the 3 pips, 3 pips, 3 pips over and over, these opportunities, when we're range bound like this, 2 boxes at a time, that happens almost every day. I don't know if you've noticed, but that's how we've been making our money every day this month, right? We set up for that next move, and while we're waiting for that next move, we make immediate money 3 pips at a time. And oh, right here, boom, take a trade. The it's this law of large numbers, right? We're exploiting the fact that the trades are minuscule, and it affords us the opportunity to use hundreds of thousands of them in our career, right? Instead of learning to trade with 10 trades, we have hundreds of thousands of micro lots to learn how to trade with. It's a lot easier psychologically when you're moving 10 cents, 20 cents, 30 cents instead of hundreds of dollars, right? Until you get your poop in a group, until you get yourself sorted out, don't look for big money. Right? There's the testing of the boxes. This is, are we unable to go through the lower half? Right? Is that what's happening here? Right? Making it a 1, 2, 3.5 box move. If it is, maybe we're turning around here, right? If that starts the new up leg, we will see shortly. That's what we're here for, right? Testing our assumptions microscopically, and we make money and create a track record when we're right. When we're wrong, we create an opportunity to fix the problem and yet not destroy the track record, right? Because we're averaging the drawdowns, we're averaging the losses. I think part of the game has to do with conviction. How convinced are you in your bias? How convinced are you in your ability to fix the problem if you happen to create a problem? And sometimes the fix is booking of the loss. Just close the trade. Testing the low. There we go. All right. So lo and behold, where are we now? Right back to the high of the ADP. Right there. Right. Right there. So this last 2 hours was just a round trip. 3 hours. It was just a round trip. Let's make our money now. Yep. That's what we're talking about. I'll recycle that trade. Right, so I'm accumulating drawdown. I'm closing some. I'm putting it back on. I'm closing some more. I'm putting some of it back on. It's a balancing act. And I'm willing to do this job with 4% of my account if required. Right. But it starts with 1%. And it's that 1% that recycles until it turns into 2% that recycles, that turns into 3, that turns into 4. Ultimately, if I'm into 4 boxes or 3 to 4 boxes, I'm looking for something bigger than 3 pips, right? But I'm making 3 pips along the way. And that's how we make hundreds of pips when the market is only moving 60 in one day. Right? The market moves 60 pips per day, but somehow you and I, are making 200 or 300 because of this. This is where the pain will come in, right? Outside ranges, now they're really pushing the outer limits, right? Right here. Pain, pain, pain. And where else? Oh, right over here, right there. Right? Every time they push it ever so slightly lower, it's just enough to take out the stop losses that were just put in. Right? The bottom pickers have smelly fingers. Right? We're not picking the bottom. We're building a position on the way to the bottom. I've been layering in all the way here. I'm not trying to throw one perfect dart and have my stop loss 2 pips away. Right? That's what's happening here. The guys that are trying to pick, they have their stop losses. And that's their, Achilles heel, right? They're losing 2 pips over 2 pips over 2 pips over 2 pips over 2 pips. We are carrying drawdown instead, which ultimately will pay us for the work that we're doing. Okay, so the thesis will work. It's an adjustment that has to happen between our ears, right? We're going to get to the same finish line, except we're going to get there baby steps. Right? Can you recycle the trade right here? No, I'm done. You just have to wait and see what happens next. Theoretically, this should resolve to the upside. And then we will be selling in and around the Powell main event. Oops, I didn't want to change that. I'll just recreate it. Something like that. Oh, come on. So it's a waiting game now. In the next 40 minutes or so, we'll have experienced or will be experiencing bankers close or the closing of the banks throughout Europe, right? And with that, usually volatility kind of slips away. Days like today, however, anything can happen. So hold on to your bar stool. Just waiting to see if we can get paid for this. That's the toughest. That's the longest. That's what people give up on trading, right? It's just, oh, it takes too long. It's not working. It's, I can't get it to work, blah, blah, blah. The sample is what's missing. Too small of a sample does not teach you anything. We trade micro lots, and therefore our sample size is tremendous. Look at the number of trades we have each day, right? And that is teaching us stuff, not the winning trades, but the ones that don't work out so well are teaching us how to behave, right? Here's the edge of the box. If you can afford to take a trade, take it. I'm just rounding it up to 25 even. 25.02s. Right. So this is what we're looking at, right? I built a long position on this pullback. I'm expecting to get paid over here, in time, over time. I'm expected to get paid in this direction. And then preferably with the help of Jerome Powell, we will be able to sell up there somewhere and get ourselves ready for the trip back down. Okay, so that's the goal, that's the plan, that's the outlay, that's what we're thinking about for the rest of the afternoon. Well, my afternoon, my morning. And that's what I have in mind. That's what I'll be structuring for. We just have to make sure we don't run out of money before the opportunities run out, right? There's that 36 pips from the top to the bottom, right? We've just now fulfilled a full move from here all the way to here. Let's just watch it do its thing. I can't click anymore because I spent all my money. I have to start closing trades in order to keep reopening more. Right. So if we look at our 5-minute ladder, we've been coming down the ladder and we've been exploiting these levels in order to bounce off of them along the way. We've made money along the way, right? We've made money along the way. This is still a pullback in a bullish market. And so as such, a pullback should resolve in our favor. And that's what we're doing, right? We're surviving until the move we're looking for finally gets here. That's the toughest part, right? This is where a lot of guys will give up trading because it's just too risky. The probabilities are nerve-wracking. This is anxiety. This is stress. What if it doesn't work? What if? What if it does work? Right. And so that's the idea. Yep. Try to keep your glass half full. And then even when things don't work well, you could still close losers and recover those losses. Right. You don't have to be in tears because something did not work. We put too much time and effort that's where the problem is. No, that's where we get upset. All this time, all this effort, and it still did not work. Oh, why? Like, don't bother with that stuff. Just do the job you're told to do, like follow the rules that you have in front of you, and then the consequences will deliver, uh, you know, the outcome will deliver the consequences. So we know how to deal with issues. It's a matter of having the issue presented. I don't want to worry about it unless it's there for me to worry about. Right? 36 pips to the pip. I'd be really curious to see what will happen if it drops 45 pips. I'm just waiting to see what happens on the edge here. That may open us up to spending money. And considering I don't have any in the box, the first box up at the top, right? I don't have any, I have targets up there. Here we are. Right back to where the ADP started from. Business as usual. The market is the trickster that it is. There's one. There's two. There's three. And there's four. I put them all in. For this, my break even is now 14 pips away. And if push comes to shove, I'll close these guys here manually. So now it's a matter of surviving. The goal is still the same. Nothing's changed. We want to be selling from higher. We're building a position that will get us higher if that's the intent of the market. If not, we start to lose. Right there. Right back to where the ADP started from. Okay, so be cautious around here. All right, looking left, see all of this? All right. Buckle up. This is when everybody gets shaken out, right? These short squeezes, or in this case, the long squeeze. Just be careful. Here we are. I'll close one maybe. We'll see how it approaches. Damn, it's dry. So much uncertainty. So much ambiguity, so much pain, all that good stuff. So how much is it moved now? Let's measure. We have traveled 42 pips. I don't want to move the stop loss, right? Because I refuse to lose more than 36. So I'm just going to give it the space that it needs. And if it has to take me out, it has to take me out. This here looks like a marching type of market. It's like a machine-driven type of environment. Right. We're exactly back to support. All of that stuff here. Boom, 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 boom. All right, we've built our position. We started up here. All right, so now let's do it. Let's get paid. Panic sets in right around here. Right? Because things have not been working out. We're approaching the stop losses. It's like panic, panic, panic. It's okay. What if we take a loss? No big deal. Right? We'll continue to trade and we'll continue to win. The losses are part of the game, right? They're not to be discounted. They're not to be ignored. They're to be, studied. Figure out what went wrong. Why did this fail? Right? $7 loss if it gets there. Another way to look at it would be this way. Some of you may actually be doing this already. Right? We're at the 50. If we get to 61, same thing. Right? If it gets to 61, we want to go up so that we can sell it from 61. Right there. Okay, so between 50 and 60, you want to be buying in this. And up here, between 50 and 60, you want to be selling this. Okay, so that's our plan of action. Let's get paid. Payday, best day of the week. Yeah, the risks are everywhere. And on a day like today, it's, last day of the month and so on and so forth, all these book balancing activities taking place. prepare for the unknown and be ready to survive with your plan in mind. As long as you know where things are falling apart and you're willing to accept that, it's a matter of surviving whatever the market has in store for us, right? It's the time that's important because you can set up the best strategy there is, and then all of a sudden it ends up closing tomorrow, right? So that's the kind of stuff we don't want to be getting ourselves into. Right, so how much space do we have left here? Oh, 9 pips, 1 box. Right, so are we willing to go down one more box? That would force me to close some trades. Right, let's just wait this out and see what happens. Right, we don't want to move the stop loss. That's the last thing you want to do. Right, well, actually, it's not something you ever want to do. And so don't even consider touching the stop loss. If we have to lose, we have to lose. Right. We're looking to bounce from here. Right, so we've recycled about, I'd say, 25, 30 trades today as a whole, since we started the group session. We are positioned for an outcome that is actually unfolding as we speak. And we have a plan of action for the next move, right? Which should come in about 2.5 hours from now. So until then, it's a matter of, staying safe, staying put, trying to survive. The goal does not change unless we're proven to be absolutely wrong, by breaking lower and 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 lower. Right. So that's how we're going to end up maybe losing 4%, but that's only if the market goes down 4 more boxes. Okay. So I'm going to let you guys go here and we know what to do. Okay. Remain a bull until the Powell speech, and then you want to be selling. Okay. So take care of yourselves, and I'll post a picture with the video probably after the Powell event. Okay. So take care, and I'll see you guys tomorrow in the same, same time zone, same everything. Take care, everyone. Bye-bye.